Okay, hello traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, October 24th. Great to be with everyone in the room. Kelly, Peter, Pete, great to see you guys. Mitten, good morning to you as well. Kamal, Iman's back in the house. Tom, great to see everyone here today. So the dollar just does not want to cease, okay? We're ripping higher on the DXY. Euro's breaking a support level we've been watching as well. We'll take a look at those levels first. So DXY and Euro. And then we'll circle back with everything else that matters. Specifically on the day today, we have the BOC, Bank of Canada interest rate decision. They are expected to raise interest rates by 25 basis points priced in. Okay, so we'll look at dollar CAD, Kiwi dollar from last night. All the sterling crosses are in play, some of which are at key support. I was chatting with Peter earlier. Yeah, I have sterling Kiwi, maybe a little deeper, Pete, but we're at a big threshold. So we'll look at the sterling crosses, sterling Oz, sterling Kiwi, and sterling dollar. Gold and crude, beautiful moves on both of the comms. So we'll take a look at those. And then we'll circle back and hit some of the yen crosses if we have time, dollar yen and Aussie yen. Any questions or trade setups from you? As always, guys, feel free to throw them on the message board at any time. Good morning, Michael. Hope all is perfect with you. Cheersy, man. Great to see you in the room. Yeah, it looks like I'm not out of the woods yet. Just had a doctor's appointment yesterday, so prayers are welcome. In any event, here's the DXY, guys. It's a big level. So we talked about 96.13. That's the high week reversal close. The last 4 weeks, okay, have touched this level and pulled back to close back below that 200-week moving average. So again here, I can't stress enough the weekly close. Your yearly high stretch comes into 96.98, essentially 97. That level converges on the same slope that we've been following from the 2011 lows. So all of these parallels are still in play, and that's really your next upside target. So it's hairy here. As you can see on some of the updates, I have not been putting up many euro or many dollar crosses. I've kind of been playing some of the other exotic crosses, but we'll take a look at this today. Big level. So here's the weekly chart. Daily chart looks like this. What bothers me is this looks to be an objective break of the monthly opening range as is, guys. So we take a step back from any biases that we have, the broader downslope we've been working within, right? Which is again that 38.2 line. Yep. Which is support, break, acceleration, resistance. You know, it's big here. The daily chart shows us breaking just above the objective monthly opening range. So again, if we close today above this level, guys, we can't fight it. Okay, we can't fight it. So at this point, for the DXY and for Euro, I'm on the lookout today to see how we close. If this is some sort of washout or some crazy wicked reversals, no, all indications don't show that yet. But your next level up, yearly high, day close, 96.71. Yearly stretch, 96.98. Both your levels on the upside on the DXY. Here's what it looks like on the intraday. A breach of upslope resistance, not what you want to see if there's going to be a turn lower here. So again, we highlighted this 1618 extension line, which caught the highs on Friday. It was sort of near the opening range highs for the week. Here's the breach. So look, at this point, scratch this slope. The median line did offer support on the opening range low for the week, but now that we've kind of popped through these targets, I'm just going to take a quick reference and see what this looks like. And my suspicion is not bad, is that we'll see confluence. Perfect. Whoop. Here's your next target. 96.71, high day close. Okay, so look, the big print for the US is still going to be on Friday. We get the release of third quarter GDP figures. Again, they're expected to come in well below 4% that we did the previous quarter, but could have the impact to move the dollar that we're looking for. So on whole, guys, still could see higher in the DXY. We have the index in overbought condition. Again, as this position in momentum persists, the market has the upthrust. So let's not try to fight this just yet. Levels of interest 96.71, followed by the yearly stretch at 96.98. Any questions on the DXY? Could you put that last two charts up for snapshots? Which ones, Ty? Here's the daily. Okay. And here is the weekly. This is really the one that's been governing all of trade this whole since the start of the year. It's just been uncannily clean. And this is sort of your do or die for the index. If we break above that, I mean, you've broken downslope resistance and upslope resistance. At that point, there's lots of upside. Ty says, got it. Right on, Ty. By the way, sir, I saw your email. You're gonna have to, bear with me and be a little more patient at the time. I still have a lot to deal with and a lot on my plate right now, Ty. So that's DXY on the intraday charts. Let's just jump right into the euro because I think it's pretty much obvious when you're looking at this. When we look at the euro, inverse. Okay, we're breaking below the low week reversal close. That's 114.36. That was what I wanted to see hold. Okay, that was what I wanted to see hold. This next breakdown, you know, the next level isn't down until like 1320. Look, you have the 200 week moving average. You've got that 50% or 25% line, wherever how you look at it. Sometimes I call it the 75 and 25 or bottom 50, upper 50, whatever you want to call it. That's there. And then your simple swing high that you made in November of 2016 was a decent pivot in 2017, caught the lows this year right here as well. So what do you do on these trades, guys? Do we chase them lower trying to run this? I can't condone that behavior. So if you're not in a euro trade on the short side, I can't, really advocate for anything fresh here. Look at this is the daily chart we've been following. Simple slope off the January, February highs, or February, March highs, excuse me. Perfect pivot, decent, same slope. If we close below this, the low day close for the year comes in at 1345. Well, hold on a second. We just looked at this. There's that 1330, 1345 region right there. So the levels are super clean. Unfortunately, we're not getting support bounce we want. And exactly like the dollar index, looks like this is a simple and objective break of the monthly opening range. And if that materializes specifically with a close today and a weekly close, we can't fight it. Okay, now support is support, resistance is resistance, so you know the levels to look for. But as far as trying to chase this any lower, I can't condone that behavior. So kind of puts us on the shelf a little bit for the euro and DXY crosses. Here's euro, by the way, on the intraday. So remember this slope. I've been forgetting to show you all the updated levels from earlier in the week. Where was euro? Here's euro. Same slope. Okay. We were looking for a breach above that 1540, 1550 level to validate resumption, but the risk was still for a move lower below this. Look where we capped out the week, guys. You can't make this stuff up. Here's the reversal. Right off key resistance in that nestled region. We didn't get the break. You're looking for a move on 114.10. That's the 786 retracement. We just hit that. Okay. And now the stretch is back into the lower parallels. Now, you don't want to get too aggressive with this kind of analysis, but certainly if we take a copy of this slope, okay, something like this suggests, if you see an exhaustion blow off, 1366 is a level we've been watching. That's just a decent pivot in price and a swing low, if I'm not mistaken, from back here. Nope. Okay. In any event, I'll find that 1366 level on the daily chart in a moment. But that's sort of the level that we're looking at this point. So possible areas looks like a good fade at the lower levels. Ty, so this is what I want to say to you. Really important. Yes. Okay. To put it bluntly, and I can do that here in SB. Yeah, I'm looking for possible exhaustion down here. But we have to be cognizant of a couple of different things. A, if we're going to try that kind of play, Ty, your leverage should be a quarter or a half of what it typically is on a trade because you're playing counter trend. All things held constant, this is a break of the monthly opening range lows. Objective as possible. Forget Mike Boutros or Jamie's or anyone's opinion. We just broke the monthly opening range lows, tested twice. And the weekly opening range low. If here's your Monday, Tuesday stretch, Wednesday break, suggests that we stay bearish below the median line. That's the opening range low for the week, right? So my point is, I'll take trades like that all the time, where we take a little counter trend bounce off of key support. You're very nimble, you're reducing your leverage, and we really want to wait for sort of ideal triggers and momentum. I'm not going to jump into this while we're an oversold. Maybe, you don't have to watch the 120-minute chart, but if we even jump to a 30-minute chart, this is when we'll start to look like, okay, let's see if the US market open gives us some sort of hold here, stop against the low, looking for the rally back towards the median line. But I wouldn't get overzealous above 1440. I mean, that's the level we need to kind of clear, at least to shift the focus to the upper parallels, right? The median line's been very decent. Support, break, resistance, resistance, break, acceleration, right? Break, kind of messy here to start the week, but there's the accelerated drop. That's the level you're targeting. No more from there, okay? So your bias is lower from now going forward. So Ty, the risk into the weekly close is for a Thursday, Friday low. Objective stuff, right? Aside from my opinion, if this is an objective break of the weekly low, typically I'll look for a Thursday or Friday low on a trade like this. Wednesday high or low. Yeah, it happens, okay, but it's not very, very common. So that's the risk, Again, for the counter trend trades, scalpers, guys who are really near term, like I have no problem playing little short scalps against the lows on swings if you get some divergence. But a little concerning with this break below this level here. Does that make sense, Ty? And again, sometimes we just got to look somewhere else. I haven't, been really forcing myself to take anything here on the euro, not at least in the near term. Dollar CAD has been my full focus heading into the BOC, not because of the BOC, but just because of where price is trading. Okay, so with these charts on both the DXY and the euro, watch these weekly. Okay, watch these weekly levels, which is why if we get the deeper drop, Tie, I think this would be a better sort of entry, closer to 13 from a weekly standpoint. DXY from the weekly standpoint has room to stretch up into that, former high. So nimble. Okay. If we get a bounce from 1366, what is the first level that we get in case that we get in that case of a bounce? Oh, on the upside. So first thing I'd be looking for is slope. So wherever the slope is, based on time, okay, if we take the time value of this slope, and let's say we kind of bottom into 1366 here into the US trade session, maybe the close of US trade to get the rebound. Ideally, Eman, it's up here. Okay, basically into the open of Asia later tonight. Your former swing lows for the month, your opening range month low. Here's your October open. Well, here's the October open, but this is the October low. That converges on slope pretty much into the open of Asia. So from a time value, the ideal scenario, guys, for me would be some sort of drop again lower into the US trade session. Maybe you get some decent divergence, maybe a trigger break. I'd look to fade that move towards the median line. Okay, but then guys, again, since the opening range collapsed and broke, even if we get up here, that could just be a correction and then it fails again. That's why nimble on the way up, I'm just chipping away at the profits and bringing my stops up. And again, as a disclaimer, I don't have anything on this here, just to put that out there. Ty, Eman, Mitten, does that make sense? Oh, Mitten says, hope you got my email. Thanks, Mitten, I appreciate that. I'll take a look. I think I got it. Okay, so that's euro. We took a little time on it, but it really is at a very critical juncture and very tricky here. Very tricky here. Ideally, you get some sort of stretch low. As I said in the update yesterday, I'm looking for exhaustion on dollar crosses, but it just hasn't worked out, and the dollar's been ripping. So we got nowhere else to look. Okay, let's move back to last night's update and dollar CAD. Beautiful setup heading into the BOC. 31.30 into 31.55 at 25 pip sum range of major critical resistance. Here's dollar CAD on the weekly charts. Okay. The 618 of the near-term decline from the yearly high is 31.55. The high week close is 31.30. Slope, basic parallel of the same slope from the 2015 highs is right there. It's do or die here. Okay, it's do or die. Like I said yesterday, this could actually go both ways. If we see some CAD weakness, they come out with a little bit more dovish of an approach. Whatever. The break above 31.55 really unleashes the early highs at that point, 33.75 from the weekly chart. Near-term support, weekly support is going to be along that 200-week moving average. Just lower, you have slope, again, from the 2012 lows. And that's basically in the region just around 29.50 or so. So the levels are really clear heading into the BOC. Again, this is major resistance. Daily chart looks like this. And it's funny because I told you guys on this, for the dollar CAD, it's been a while since I got a fix on it. Back when we updated early in the week, I really haven't looked at this too often, but all I did know is that weekly chart was screaming resistance. Here's daily, okay? High week close, 31.30, 618, 31.55, same region, same slope. There she is. Now, okay, if this is, and this is not a very clean week, monthly opening range, obviously, but if this is a break, this is the support that we talked about yesterday, 30.67, 30.66. You have the 100-day moving average and the objective monthly opening range highs. We're sitting on that support right now, which makes the intraday chart all the more interesting. Here's intraday. Okay, really clean slope off the lows. Same pivot or structure that we were looking at last night. Same structure that we were looking at earlier in the week on the 22nd, right? Same thing. This is what we looked in the open of the week. A day later, it's basically the same exact thing. Very clean daily, weekly opening range below a major resistance level. So 31.30 to 31.50. If today's look, the swing trades obviously are still in, right? No change on those. If we were to get a sort of spike into this region, anyone who's not holding position, I think, again, that's a possible entry to try to fade this lower. Ultimately 30.67, a basic break below that. Look at, aside from that 100-day moving average, guys, look at the pivot in price that you've seen there. Resistance, 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 kind of messy, but you're sailing on both sides. Downside break from here, you're just looking for the lower parallels. The 618 line comes in at 30.20. Confluence support comes in right below 130. It's like 129.80s if we break lower. So I'd like to fade a rally or a spike. If you're holding shorts already, depending on what your risk tolerance is, the one other thing I would be just pointing out to your direction is a basic trendline resistance extending off the high that you made back in June now has 4 touches. 1 touch, 2 touch, 3 touch, 4 touch. You can even take this as a 5th touch, and that's right here. So if you want to play it a little bit more closer to the chest, 31.17 bounce kind of bail or get shook out, just keep in mind that even if we were to spike intraday, this is still the major key resistance level that we're looking at on the daily and weekly charts. So sort of a spike into here would be the dream trade, I think, to try to fade. Settling above 31.55 is done. Okay, if we break above here and settle a daily close above this, you're looking for 32 as an initial target, high day close for the year. Or 786 comes in at 32.56, then the high day close above 33. So like I said, they're already pricing in 25 basis point hike. Data hasn't been all that good for the employment sector for Canada, so it'd be hard, I'd be hard to visualize them coming in super dovish or super hawkish, guys, as far as interest rate hikes. But just to let you know, markets are actually pricing in the possibility of another 25 basis point hike in the next 12 months. So it's not like there's no expectations. Marco says, do you think that price reaction from the BOC will be immediate, or it might take some time to read between the lines? So it's going to be based on the policy statement, Marco, because the markets are already pricing in the 25 basis point hike. So it might not be on initial release because we're going to get the 25 basis points, going to bring it up to 1.75. It's the accompanying statement that traders will be looking for to give us a hint on whether they're shifting their policy of the headlights moving forward. Again, I'm not expecting much by way of shift in policy or anything major. I'm just looking at price, right? CAD's been getting beat up. Dollar CAD higher is CAD weakness, right, guys? So if even the CAD gets some sort of glimmer of hope, there's some sort of readjustment in interest rate expectations, that would be the rally in the loonie dollar CAD lower that I'd be looking for. Make sense? RSI, can you remind me what period you're using, and is it the same for the weekday 2 hour? Yeah, I mean, so this is usually a 14 period. If I want to smooth it out, sometimes I'll look at a 20 period, but it's typically the same on the different time frames. And again, I want to always stress whenever you're looking at RSI, we use it with, this is added indicator. I'm not a RSI trader. You don't want to base your decisions just based on this, but when price is coming into big levels and RSI is giving us a trigger or holding support or something like that, there's certainly a tell, right, that the momentum indicator can give you. So a little point on that. More than welcome, sir. Great to see you in the room as always, Mitten. Okay, so any questions on CAD as we head into the BOC later? Weekly opening range is intact, even if you get the topside breach. Weekly, daily, intraday resistance, all up in 31 into 3130 into 3155 is 25 pip region is where I'd want to see a spike if it does rip, break below this, and you're looking again for the lower parallels here. All right, that is dollar CAD. So we did 1, euros 2, dollar CAD is 3. Kiwi. So I haven't been in this, but we highlighted this chart early in the week. And our first initial play for the week was saying, look for resistance here, right? You have the October open, 66.25 into 66.40, a 618 extension off the low, 786 retracement off the highs, all stacked up right here with slope resistance to start off the week. Didn't even get it, gapped lower, or we just gapped higher rather, filled the gap and moved lower into support. And last night we updated this chart once again, just saying, look, you're basically sitting at support. If we break below 65.33, daily chart also highlights support there as well. You'd basically be looking for a much larger decline in Kiwi dollar. Now, we'll look at, Peter's looking at sterling Kiwi, and Peter, to be honest with you, that's the sterling cross or the Kiwi cross I'm looking at as well. And if that is at support, then you'd be suggesting basically that you're going to see Kiwi weakness, sterling strength, and that would be a breakdown in Kiwi dollar if that's the prominent or predominant play. So yeah, this could go, I'm looking for a reaction off this. Like I said last night, no change to any of the levels. No change to any of the levels. We're basically sitting at support. It's the pivot below 65.33, which would have me selling rallies again back towards these targets. If this is going to hold, this is basic slope support. In the earlier updates, guys, the previous updates, the link is always provided for you. We took a zoomed out view of this and looked at the last 3 times within this formation when we've seen basic trendline support break, back to the parallel. Basic trendline support break, back to the parallel. Basic trendline support, if it breaks, we gotta be looking back to the parallel again. First, or major area I'd be looking for first would be the low day close at 64.50, but you get the picture. Is this a rinse repeat? Well, that's where I start to look at momentum. And momentum, all of these trades, the momentum trigger broke well before the trade actually reversed. Here's the break. We bounced, tested that high again, then we cleared that trade. Here's the break. We bounced, tested that high again, then we clear that break, right? Here's the break. We bounce, tested that high, then we clear the break. So if price is any indication over the last declines and rebounds within this formation, well, if we get weakness below 65.33, you'd expect to move back to the parallel. Okay, so sometimes it takes, it's beneficial. It can be prudent just take a broader look at price and what we've been seeing in both the oscillator, momentum, and price action. Certainly highlights the risk for a move lower sub 65.33. Okay, so I'm using this as a pivot in near-term price, as it were. Here's Kiwi, just a bigger picture on the weekly charts, right? Big region. This is the low we closed for 2015. It's the low it's still the registered low over the last 3 or 4, what is this? 3 years, right? So not a bad reversal. Could see a little bit more upside, but at the initial juncture, it's all about whether this holds or not. Capiche? Questions, comments on dollar CAD? All right, that's number 3. Or excuse me, that was Kiwi. That was number 4. All right, let's take a quick look at the Sterling crosses. And Pete, let's jump into that Sterling Kiwi because both of them, Sterling Oz and Sterling Key, are interesting junctures here. So we'll come back to the commodities. Commodities are beautiful too. Let's just go over the Sterling crosses real quick. I think it's pretty important here. Sterling dollar. Here's what it looked like to start the week. This trade, man, there was awesome opportunity and I missed it. And again, maybe I'm getting a little trigger shy here, but here's the formation we were looking at from the start of the week. The initial play to start the week was off this region. We were noting this is the lower 75% line, if I'm not mistaken. Or is it 618? 618. Okay. So the 618 line of that descending slope, okay, caught that low, right? Price was sitting at the 30 level. Bearish invalidation was 130.50. But the play here for me was early in the week for that recovery. Guess what? We spiked right into this region and we failed, breaking lower. Now we're trading here. So right within the confines of the formation, super clean price action. Here's, again, what the intraday chart looks like. Let's get the 120 up there. So again, just super clean price action. This is support. This is support. Rallied into here, failed, back down, big support. 618 retracement on the daily charts is the longer term view of the advance from the 2000 post-Brexit low. Okay, so this is taking into account 2016 rip higher in sterling. That's the key 618. And it's the 618 of the near-term advance just off the August low. It gives us a range of 2877 to 2905. That's big support right now. Okay. Now, if you want to sprinkle some goodness on that, here's the October opening range lows. So today's close is going to be paramount. If we close below it, boy, the risk is still lower. And remember, the downside break of a descending formation can be oftentimes the sharpest part of the decline. Breach of an ascending formation can be the sharpest part of the rally. So all things held constant, I'm looking for bottoming near 2877 into 2890. This whole region, big support. Here's the 60-minute, got an outside reversal candle. Here's the 30-minute. That turned out to be an outside reversal candle as well, taking us back above oversold conditions. But here was the last time we did this, right? You still slid. So I'm looking for something a little bit more aggressive as far as seeing a shift in momentum. Maybe something like that. We're going to forego some of the probably a better entry, but we can't just fight this dropping knife and try to catch the lows. If we're going to bounce, this is the spot to look for, though. Okay, so no change to any of those levels from earlier in the week. 2877 into 2905. That's the key support level we're testing right now. Questions on sterling? Number 5, number 6, pound Oz. Here's pound Aussie. And here's the setup that we looked at earlier in the week. Here's the weekly chart for pound Oz. So telling the story from the top down, 618 retracement of the entire decline from the highs they made in 2016. This rip lower right here was 187.19. The high that we registered so far for the month is 187.28. Okay, just probed through that. And here's the pullback. So again, very nice area of resistance. Here's the pullback. That was the weekly chart that first shifted our attention. Here's the daily chart. Basic slope support off the low from August, extended off the high here, literally converged on that 618. Again, shifting the focus lower on that reversal day. The high day close for the year is 85.73. Key resistance We were looking for support initially at 82.36, 618 of the advance off last late September low, and that's also right on slope. So we're probing that region now. Okay, here's pound Aussie on the intraday. The initial play to start the week, if you guys remember here, was just like sterling dollar. We wanted to see a rally into 84.25. Bearish invalidation was 84.83. We turned right in this zone. So you got 84.25 on the long side, and we failed to head to that secondary target. Here's the breakdown. 82.17 to 82.36 was the next and final level I'd be looking for. So look, that basic slope support, okay, just off the lows, still comes in just lower with the lower parallel here at 81.47, let's call it. This retracement now is null and void, right? Because we've broken the low. So this is now null. Near-term resistance. Bearish inval. Okay. So the game plan right now, if you're holding shorts on this, I wouldn't necessarily tell you to bail, but this is a big spot to take some off. And then this is the last spot I'd look to clean up the most of the position. If you're looking for something to try to get into fresh, again, the ideal scenario is that I get a rip lower into this region before the recovery. But it's either a rip down there to look for some support and an entry, or a breach through the median line. In that case, I'd be looking to buy a pullback targeting a breach of the upside opening range highs for the week. So that's 84.60. But it's do or die here, right? Do or die. Pay attention just to this, the near-term chart. This has just been everything I've been watching here so far. So that brings us into the third sterling cross that we've been covering this week, which was, so here's sterling Aussie, guys. We ripped higher, took out that 38.2, right? Reversed off that, testing this break now. Both your key support targets. Pound Kiwi. So Peter was looking at this earlier. So Peter, here's what I'm looking at with this. This is actually one where like the top-down weekly chart approach is very telling. Look at this. Okay, so the high week close for 2017 came in at 95.38. That governed the close all year long until the close in August, which took us through the top side. Basic trendline resistance, 2-point touch broken. Here's what I'm looking at here. 200-week moving average. Basically testing that now. Former trendline resistance could be support here, right? Former stretch highs for the year. This whole area obviously is a big pivot in price. But more importantly, here's sterling Kiwi on the daily. This is intraday. Here's the daily. So Peter, your monthly open comes in line with the 50% retracement of the June advance. So you're looking at 96.89 monthly open, 96.84. Okay, just lower again. Former trendline resistance, 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 break. A little bit of a sail through here, but it's been support, support. That converges on the lower parallel, just lower, like 96.50s. So two key levels for pound Kiwi. I'd be looking for a little bit of an exhaustion hold, if not the objective, okay, Pete, monthly opening range low. So forget anything that anyone says, any opinions. 96.41 is the monthly opening range low. It's on slope support. It's below the monthly open. That's the only thing. If we break below that, this thing's going to fall apart. Okay? But Sterling Kiwi, can you flicker back to the weekly? Yeah, sure, Mitten. Here's the weekly chart. Okay? I keep my weekly charts super basic. I don't want to clutter it with too much analysis. I'm just looking at basic slope, median lines, and momentum. Okay, this is your objective monthly, yearly opening range that broke higher. So the upside bias was there. Longer term, yeah, I think you got a target here at 2, believe it or not. But near term, here's the pullback, and I do want to see hold above. 95.38 on the weekly charts is big, but even on the near term, you have your monthly open and monthly opening range lows at 96.40 to 96.89. So anywhere in here is fair game, at least for a near term rebound. Make sense? Mitten says, got it. Thanks. Right on, Mitten. So that's Sterling Kiwi. Peter, does that make sense? He said, thank you so much. You are great. Cheers, Peter. I appreciate that, man. I hope that helps. It's a very interesting region. It's funny that you asked about it today because I've been staring at it all morning, kind of seeing, well, is there divergence? Is there something in near-term price? Here's the intraday chart, super clean. All you got to know is that this is the objective weekly opening range. You know what I mean? So if we break 96.89, we could spike into a region here and then recover. At the end of the day, I'd still be pretty comfortable using 96.75 as your bearish invalidation for the breakout. Near term, I'd love to see a spike into one of these levels for the washout. But the signal is just not there to press it yet. No divergence, nothing yet. So we'll keep an eye out on this one. Levels unchanged since the start of the week here on pound Kiwi. Questions, comments, concerns? And that's the rest of the Sterling pairs, guys. That's all she wrote on the Sterling crosses. We'll be watching it very closely for some bottoming here on those. Let's take a quick look now at the commodities. Upside targets, Peter. So on the top side, if we break 97, 90, I'm sorry, if we break 98.74, I'm getting a little excited here. In that scenario, your objective pivot range is 99.95 into 20030. But just to be, frank with you, if we do make the reversal, the first thing I'm going to do is tack on a quick retracement and look for the initial 38.2. And if we do that right now, it comes in that same region right here. I take everything into account, Min. I'm at one step ahead of you, buddy. So, this was for Peter, as far as the upside target. So even if we were to break, we don't have to worry about readjusting our targets because that 38.2 would be right on a level that we're watching either way, right? And that's the broader 38.2 from the daily charts here. So this is of the decline from the high in 2015. Make sense? He says, okay, right on. All right. So, commodities. Man, I've never been so excited about the commodities, guys, as I have these last couple of days, just because of how clean these levels are. So, let's hit crude first from last night. Here's the update. I provided all the daily, weekly, and intraday charts for you. We've been following this one like a hawk. So, to start off earlier in the week, we talked about crude taking out all our downside targets. We were at slope support. I was thinking you can get a little decent recovery back up towards like 70, 60 to try to sell it. This thing had something else in mind. The downside break of a descending channel, right? Saw the accelerated drop. This is, believe it or not, from the 18th of the month. Guys, all we did was hold this, take out all our downside targets. 67.34 got taken out. 65.82 was the low. Now, aside from an 88.6 retracement, which a lot of people may not be familiar with, it is just the next derivation of a 786. If you take 786, square it, you get the square root of it, rather, you get the 88.6. And basically, that gives you 65.82. Tends to work with commodities and commodity currencies a little better. Just my humble experience over the years. I don't know why, just what I've observed. But it had us looking for that target anyway. Just lower is 64.66, which is a key support region and a key 618 in crude prices. So before we get into the intraday charts, I just wanted to highlight the daily charts and the weekly charts that we're coming off of, right? This is basic trend line or pitchfork support from the 2016 lows. Support looks like a break, guys. Now, the first major area they'd start to look for some sort of rebound is right here. Again, your 52-week moving average, so your yearly moving average, and then you have the close low and a basic 236 of the 3-year advance, or 2-year advance, whatever you want to call it. Weekly, right? Weekly. Daily chart looks magnificent as well. Here's what the gold trade looks like on the daily chart. Okay, we highlighted 1235 into 1238 as a major area of resistance. That is the 100% extension from the advance off the low, two equal legs. A 38.2 of the yearly range. So confluence Fibonacci and the November lows, or December lows rather, from last year. Pivot, break, resistance, once again resistance. Okay, now I do think gold, did you switch from oil weekly to gold daily? Oh, I did. What am I talking about? Yeah, I'm so sorry about that. I'm just so excited about both those trades that I'm looking at the gold breakout. Crude, I'm so sorry. On the daily, geez, here's the breakdown. 88.6, 618. We just talked about that on the daily chart. Here's near-term resistance, 67.34. So this is what we looked at yesterday, and I was just noting that if we're gonna see a bounce, if this would be the first place to look. Why? Just the confluence region of all those factors we just highlighted, aside from the 618. So we literally dipped into here, guys, and we're right back at resistance, right? 67.34. So we came here, dipped, and we're right here again. If we're moving lower on this stretch, this would hold. Okay, this would hold. If we get a price action surpassing this intraday, account for those lows, account for that moving average, okay, 200-day moving average, 764. If we get above this, yeah, we look for a larger recovery. But at the end of the day, guys, crude broke a big level, and we need to respect that. We need to respect that. Now, this whole Saudi headlines is going to continue to filter in. I was just kind of filtering through some of the financial news publications this morning. They're talking about production cuts or whatever to try to stem prices. Look, we can't trade that news, right? We have to trade what price action is saying. So the first area, 65.30 and 65.80, is sort of 50-cent region of support, was the first area to look. Here's the recovery. This is just, in my mind, recovery within the broader breakdown still. Intraday looks like this. Okay. So again, no change to any of those levels. We bottomed out right here. Top side, there's your first area you'd look for resistance, right along that former channel, right? So downside break, there's nothing to do here as far as trying to get short again, in my humble opinion. I'd be looking for exhaustion if we wash out into this region again for a little bit of recovery at that point. But boy, that was certainly a very critical break that we made yesterday. Any questions here on crude? Could see some recovery all the way up to 69.17. Like I said last night, that's our bearish inval. So even if you get near-term recovery into that region, don't get suckered into thinking that this thing is getting back up into the 70s. I know the headlines and whatever, but price is price, right? And as long as we stay below that region, I think we need to be mindful of the downside. Questions on crude. Now I'll go to gold. Mint catching me a little off today here with both these commodities. So excited. Look, gold is very similar. Big resistance region, 35 into 38. Big region of resistance. You have the 200 week moving average. 38.2 retracement of decline. 100% of the advance off the lows, right? Here's gold on the daily. Boom. December low as well as those fib retracements and extensions. Near term, this is what we looked at yesterday. Is the same. It was literally the same exact trade as crude, right? We said if crude is going to rebound, this would be the first place to look. Same thing on gold. If we're heading higher, first place to be look on this, on the pullback, would be right here. And that's what I was trying to kind of ascertain yesterday. This was definitely an area of which you look for the pullback. If this is just sort of an interruption, would look for price to hold above that 100-day moving average. Now, if we look for further evidence, you want to see price action sort of say something. let me take it back to the 60, I guess. This is what I was looking at earlier today. If this is corrective, look where that 100% comes in. Right on that 100-day moving average. It's disgusting. So this, I mean, I always say if this stuff doesn't turn you on, check your pulse, right? Because this is what we live for. So this is like as clean as it gets. Weekly support in 112.22. That's what I told you yesterday. Is kind of still what I want to see hold the support. If we have stretch on this upside, like I said, I like gold higher, generally speaking. But we're coming into such a critical level, it was worth definitely yesterday respecting the downside. So I still think you slide a little bit lower. 12.22, 12.23 is the lowest I'd want to see it if you're holding a longer term position for the upside play. On an objective measured move of this triangle breakout, you're still looking for 1250, 1251. 1251 or 1252, I think is the August 2017 low. But this is, 1251 is the 100% measured move of the triangle breakout. So levels are clear. I want to see a hold above 1222 if we're heading higher on this stretch. If we break below this, doesn't shift our broader opinion on gold, guys, but it certainly suggests that there's a larger correction at hand. You'd look for 1215 at that point, maybe even as that lower parallel for support or re-entries. All things held constant, I want to see a hold above 1222. Any questions on gold? Super clean, super clean. And literally, the previous update on gold, guys, was on the 14th, okay, over a week ago. Look at the chart. It's the same exact chart. We literally held here, broke that 1215 level, checked it as support, and then we went right up into the next subsequent targets, 1334, or 1227 rather, and then 1234, 1238. This is the big zone, and this is what's held as resistance so far. Okay, so the kickback from here, if it's going to hold, we want to see 1222 hold for support. Any questions on gold? If you have some time left, can you look at dollar Swiss? Yeah, sure can. I do scan through all the majors, guys, daily. Look, for dollar Swiss, here's the deal. I don't know what to do with this. So you can tell I haven't been interested. I haven't even moved the monthly open marker. Here's your monthly open, right? So, what do you do here? I really don't know what to do. If you put a pistol to my head, Marco, I would still say look for an exhaustion sell-off or exhaustion rather blow-off to sell. We haven't made any new highs in the oscillator since this high here. Price action has made new highs on a closed basis. But I just don't have anything close in near-term price action to put me in something. I hate when I see this, especially when they're really sharp like this. I always tell you guys, these are the weakest plays. When it's a really sharp channel, this would have had me looking to break. It didn't. It came to the first pivot of support and it rallied higher. So look, anywhere between 99.80 and the high day close at 100.15, Marco, anywhere here is fair game for an exhaustion. And I feel like I'm just repeating myself over and over again, and I don't want to do that, right? I can't just get into it based on that alone, but the signal is just not there yet. The signal is just not there yet. Here's the daily chart for Swissy, by the way. Let me just take that again. So if you recall, this changed everything for us. Back into the October open. This break changed the whole picture for Swissy. So I just don't have any clear indicators on what we should be doing in the near term. Here's the weekly chart, just to give you a picture there, Marco. Basic trendline resistance off the 2016 high actually does converge on the high week close. But again, that's the same level. It's below 100.15, 100.30 on the daily chart. Spike, maybe look for exhaustion there, but man, this is a low conviction trade from my end. Okay. Mitten wants to take a look at euro yen. Certainly can. Ty loves the euro crosses, euro and euro yen. So let's take a look at both those. But before I do, I'm gonna switch with both of you and take a look at dollar yen, US dollar Swiss. That was number 8, 9, 10. Let's do dollar yen, and then we'll take dollar Swiss. This will be 11, and dollar Swiss will be 12. Okay, so Mitten says yes, the abomination. Yes, Kelly, I got both of you before you asked, right? So here's dollar yen, man. So look, the levels are clean. The momentum is getting a little bit annoying on the near term front. Um, is Chip in the room, by the way? We had a new subscriber who's asking about the SPX. We'll take a look at that as well. I will not leave. I mean, Jamie, you're going to want to get his input on that later in the webinar today at 11 o'clock, but I'll be more than happy to show you my take, yeah, on the SPX in a moment, sure. So here's what it looks like, dollar yen. Daily chart, okay? This is major slope support. No other way to say it. It's as clean of a formation as you're going to get in the abomination, both on the way down with the break below the descending pitchfork from last year's late November high to the ascent off of this year's lows. It's been textbook plays. This week, okay, it's been kind of hairy. So, we start off the week breaking back above the yearly open. I was looking for failure, a short entry between 1308 and 1327. Um, the break early in the week, it just didn't give it. It just didn't have any legs to get through that before pulling back. So look, on this trade, well, first of all, to put things objectively, a break below 1160 is what would shift the broader focus lower. Okay, it'd be a break of the initial and objective monthly opening range lows. You have the 100-day moving average in there as well, 618 retracement of that advance from the August lows as well. So really clean spot. Intraday, it looked like this. Here's the 120. And here's what we looked like earlier in the week. I mean, dollar yen hasn't really changed from a level standpoint. We went through all of these. Dollar yen. Here we go. So here's what we looked like at the beginning of the week. This was my problem. I got pissed off because I saw this break and I was like, all right, let's not do anything. Don't touch dollar yen until it gets to 113, 113.27, and let's look to sell it there. It never stretched, right? It failed. It sat there, broke back below, and then not only did we rebound off that lower parallel, but we rebounded off of, again, 1216, 1265, 1274. This is a region we've been watching for weeks already, or at least because of the yearly open, at least. The 38.2 is from the low, but you get the picture, right? So again, pistol to my head, I want to short dollar yen. I want to see the yen strength start to pick up. It seems like it's ready for a prepped hold at 60 on this momentum bounce after breaking 40 on the downside, which would be, again, an indicator for the shift in momentum, at least in the profile, change in the momentum profile. Here's the 60. No divergence yet. Nothing yet here either. Now I'm getting like super tight here with you guys, but just humor me for a moment. Yep, nothing there. Watch this for now into the US Open. So that'd be the breach target. Same region, 1307, 1327, 1308, 1327. If we crack back below this, the 1215 break is still what I want to see go to open up the downside here. Questions on the abomination. So that's where we are in the abomination, right? It's got a, essentially for all intents and purposes, it has an opening range. You're looking for the break. Ideally, it was a fade against 1327. At the end of the day, if it breaks below 1215, again, you're looking for 1160 into that 100-day moving average, 1145, big zone. So that's dollar yen. The crosses, what were the questions we were going over? Dollar Swiss or euro yen. So that's dollar yen. Euro yen looks like this. I know you guys love euro yen. It's a really popular pair. I just don't like it. Not here. Okay, if I don't have clarity on the daily chart or the weekly charts, guys, typically I stray away from it. Um, it's just like not having a larger roadmap for where you're going, and I don't want to take turn by turn turns the entire way down. So, um, you look for some clarity in structure. Momentum's still pretty bearish. 618 of the advance off that low that you made back in August is still 128.04. That gives you another 30 pips down to the downside before you even run into support. Let's go back to the intraday. I remember this. Someone asked about this last week. It probably was you guys, Ty, actually. And we added this pitchfork, high, low, high. It hasn't been that clean. That 50 line on the lower 25% line, or the lower 50 line has been support, 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 which has me thinking you look for the break into the lower parallel, which would take you somewhere in 26.90. Now, that would be a good yen call, right? Because we are looking for yen strength, which would be great. But I'm not necessarily sure the euro drop would kind of warrant a move that big, especially with the euro coming into support. We looked at that earlier too, right? $128.56 is a huge level going back a year, says Ty. So yeah, I mean, I look at areas of this 128.50s. You're saying, huh? Decent pivots way back. You have 128.53. He says decent pivots way back, okay, but I wouldn't necessarily say that's an operative key level, especially because just last month we came into this drop here and held. So the fact that that drop where we bounced off into the highs is the 618 would still put this for me as a key level. Now, interestingly enough, 128.26, that's actually the low close for this drop here. It's 128.26 into 128.04. Mitten says, I have a quick question on the pitchfork you use. It has fib levels. Is that available on FXCM as well? I can only find Andrew's pitchfork with a high-low lines only. You know what? I don't know, Mitten. I haven't used FXCM's trading platform in a couple of years at this point. Listen, if you can't get the percentage, take parallels of the slope. Okay, so you'll see me do that, right? I'll take a pitchfork here, and yeah, I might not be able to get the parallel inside, but just take a parallel of the slope, match up the slope, and go from major highs or lows. So here, if I drop this slope here, you could see support, support, and once it broke, it was resistance. So there's other ways of deriving it, and there's tricks around actually where you could get the 618 line. So another thing you could do, and this is completely off topic now, but if you draw your pitchfork like this, for example, Mitten, you could take a quick retracement of the range, and then along that slope where the 618 line hits, that's where you actually extend the line from and the parallel. And it'll actually give you the same levels. But look, TradingView is free, so if you're really, really interested in it, this is probably going to be an easy place to get your hands on those tools. Okay, hope that helps, sir. And that is Euro Yen number 13. Good run today. I'm not leaving without talking about the SPX. One other Euro cross. I don't want to segue again. One other Euro cross, guys, I was looking at this morning, Euro CAD. Interesting levels on just where the broader trade is on a weekly. Was that what I was looking at? No, scratch it. Anyway, SPX. Here's the SPX. Okay. We looked at this on Monday in the webinar on daily effects, if you were with us, we took a log scale on this, take a little bit more account of percentage-based moves in price. That 2009, so post, obviously the financial crisis, the rally, this is the formation that has been holding from the 2009, 2011 high-low, or low-high-low. Okay, this is the 38.2 line. We talked about that. The 138.2 line of the range caught resistance back in 2015. We searched through it earlier this year before pulling back. Yesterday, I highlighted this on Twitter. So you have two levels to look here for SPX as far as major key support. This is weekly, okay, for anyone who's watching this on a longer term. You have the 52-week moving average converging on that 618 line, which was nice support, resistance, support. That converges on the 52-week moving average, just lower. You have the 618 of the yearly range and yearly open support. That gives you 2671 into 2687. That's the level, okay? Beyond that, SPX is in trouble, for sure, okay? Ahead of that, this could see some more sideways. We could sit here for another week and a half. We could even go back and test the high week close before we turn around. But recognize the danger of a close or push below 2671. If we turn negative on the year, aside from that just being a psychological type of thing that people will run with, it is technical damage for sure on the broader uptrend. All right, so really cautious on the shorts here because you're into support, but the same respect, a pivot close below the 2018 open leaves a lot of room for the downside if we do make it. So it's do or die here. Gunshot approach, I do think you get a little bit more of a rebound consolidation before it makes the move. But certainly the weekly chart's been very clear as far as what we should be looking this week. Okay. Any other questions or comments? That puts me over my time for today. Thanks for everyone who showed up. I will be back on tomorrow, 8:30, same time. Don't forget, Jamie will be up at 11 with the midweek strategy webinar to go over a little bit longer term approach on some of the trades he's been looking at. And I will see you guys tomorrow morning. Best luck trading. Cheers.